So, what next for gold in May? Let's take a look at that. I think that we've got a really interesting setup here. If you look at the gold 4-hour chart here since the April the 1st, went up to an all-time high. We've rolled over since. It was a very strong start to April, around an 8% rally, which is impressive indeed. But gold has come under some heavy selling pressure. And what worries me slightly is even as yields have come down in the US, the dollar's come down a little bit. We haven't seen gold manage to hold on to these elevated levels. There's been quite a lot of profit taking. We saw almost 6% correction in April, down to that 22.91 level. And we tried to rally, failed again, which was rather disappointing. So I think there's some profit taking on the speculatory move out there. We've seen certainly a cooling off of geopolitical tensions. There was hope of a truce or a ceasefire between Hamas and Israel, but that's now looking not quite as good as it was. The stronger dollar, I think, may have been putting a bit of pressure on, but to be honest, that strong dollar has rolled over as well, and gold still hasn't rallied back. But I think the reduction of global rate cut expectations has also had an effect in response to inflation. So it's a bit of a mixed bag. Some of the reasons that people got very bulled up about gold are just not as convincing as they were. And I think this has prompted this, okay, what next in May? Because I think we need to take a look at what could drive gold from here. So the case for stronger gold from here, I think always with a commodity that's based in dollars. I mean, obviously a lower dollar should help support gold. I think gold bulls were a little bit disappointed that it hasn't helped over the last week or so. But I think people were late to the party, and I think the speculators late into this have been squeezed. Geopolitical risks do remain high. We've still got issues in the Red Sea. Hamas Israel isn't sorted just yet, and there is actually ongoing problems in the South China Sea as well, between China and the Philippines as well. So keep your eye on that. But I think this increased expectation of Fed rate cuts is now probably coming back in to support gold as well. And the data does suggest, forward-looking data in particular, does suggest that the US economy is slowing. So we could get these rate cuts that are being priced in now from the Fed, and that should help gold. But if inflation stays strong as well, if inflation is rather sticky, gold is not going to go down very far. And I think the issue with yields is so important, because I think Chinese central banks or Asian central banks are still buying gold on dips. Chinese retail accounts have been buying because of the weakness of the yuan, but that seems to be fading slightly as well. So some of the reasons for being long gold are diminishing slightly, but not enough to really sort of see a massive attack on gold. If we look at the reasons for a slightly weaker move in gold in this month, I think this build-up of speculative longs is still possibly a bit of an issue. I do think the market is still fundamentally long gold, and some of that is speculative rather than real money, if you like, or asset managers or pension funds that are putting some on the portfolio. And I think there is a danger that you could still see more volatility in gold. And I think this price volatility is very important. It's harder for shorter term speculators to stay in a currency or gold or a commodity or anything when we get violent moves. They just get beaten up so many times that they move to the sidelines and wait. And that takes some of the natural buying out of things like gold as well. I think the US inflation data on May the 13th is vitally important, because that's going to impact US bonds, it's going to impact the dollar, it's going to impact risk. And remember, sometimes gold is a risk on, risk off trade as well. So I think that data on May the 13th is critical for gold. And I think the idea of a higher for longer Fed, now, while some of the growth data is beginning to turn down, inflation isn't showing any signs of really coming down at all at the moment. And so that higher for longer feeling from the Fed, that holding rates high in restrictive territory, could be a bit of an anchor on gold, certainly a cap on gold, if not weighing on it as well. And I think the other thing to consider is the technical structure. And for me, a break below this 22.77, the May 3rd lows, could spark further selling from those speculators who are caught a little bit long, a little near the highs. And I think that's quite an important setup now, that technical picture as well. So what I want to do right now is go over to Richard again, so he can give us a really good view of what those technical outlooks look like on the charts. Richard?
Yeah, great. Thanks very much, Mo. And I think the technical side at the moment definitely tends to highlight the more balanced uncertainty themes that you've been describing. And it's very much a matter of looking at the May lows at around the 2277 area as being the critical support point. And certainly if we do start to see that give way, the risk is that we could see a deeper sell-off. However, to the upside, what is just as important is this mid-average, the Bollinger mid-average at 2337, which for me is an important resistance focus. Effectively, in a very, very basic description of a trend, if you're below a declining mid-average, as we currently have in gold, then you're trading within more negative downtrending conditions. If you can break above that mid-average and see the average then turn up, you're effectively trading within an uptrend. So at the moment, we're currently ranging between the May lows, 2277 type area, and this 2337 mid-average as the important breakout points. And effectively, while we're within this range, it's difficult to have a clear view on the price action of gold. Certainly, if we start to break back above the mid-average, then the risk is back towards the April highs. And if they start to give way possibly further, because we are trading within a much longer term bullish trending pattern. We can see that from the latest sharp acceleration higher maintains the bullish pattern and the uptrend of higher highs and higher lows. While to the downside, I think if we do start to break that May low, the risk of a deeper retracement of the February-April upside would certainly increase, and the 38% level, 2263, I think would potentially really be indicated as likely to give way. And if that does start to be breached, then 2210 is the midpoint, 2156 is the 62% retracement. So I think this current range really is a matter of just watching to see the directional risks and how we evolve out of this range, and whether or not we start to see sufficient support to take out the resistance and retest those April highs, or we start to see new lows for May and a deeper retracement developing. At the moment, the risks could be skewed because the mid-average is falling to the downside, but we really need to see that breakout first before we can really assess where the longer-term directional risks are currently coming into play. So that's the outlook for gold. Thanks very much. I'll be back in another month's time to look at some of the other asset classes. But for now, thanks very much for joining us.